The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And our Sunday best to you. Welcome to the Accunet Mortgage and Realty Show. I'm Steve Kettlear, along with Accunet Mortgages and Accunet Realty Advisors President Brian Wickert, who joins us in the second half of this hour. And we're also joined, this is kind of a bi-coastal show this morning. We've got David Wickert, who is in New York. Brian will be joining us from Seattle. Is that correct, David?
You got that right. It's a coast-to-coast operation this Sunday, and coming to you live from New York, though I think SNL's taking the summer off, so you'll just have to settle for me at the moment.
Excellent.
We've got a couple topics to dive into. We'll talk about quick the jobs report from Friday, and then also we're going to dive into what was Dad's theme this week in his radio commercial, which was the devil is in the details when it comes to buying a home, when it comes to refinancing the mortgage you already have. So let's dive in first to the jobs report from Friday. Don't look now, but the economy here in America might be doing okay. For those of you who might be ignoring financial news in favor of great summer weather, the American economy added 255,000 jobs last month. That's a lot of jobs, and that was above expectations of a mere 182. And the unemployment rate held at 4.9 for all you classic economists out there. Some folks think that full employment is somewhere at 5% or below. And what is, to just remind everybody, what is good news for the economy is sometimes not so good news for mortgage rates. Oh, and did I mention that the S&P 500 and the Dow Jones Industrial Average hit record highs this week as well?
Oh, for sure.
So, economy going strong, and kind of what this plays into in the mortgage narrative or timeline of things is, again, Fed Watch 2016. So the Federal Reserve is kind of getting pulled in two different directions. They meet again in mid-September in Jackson Hole, Wyoming, and they are going to, along with that meeting and also again in November and December, they're going to try to balance what looks to be a strong-ish American economy versus a weak-ish world economy. And I'll give you example A from this week of kind of the weak-ish world economy. So thank the Bank of England.
Yeah, they dropped rates.
They did. So they cut their benchmark interest rate to the lowest it has ever been in, wait for it, the 322-year history of the Bank of England. So here in the year 2016, the Bank of England is lending out money for the cheapest it's ever done so in more than 3 centuries. And just as an odd note, the governor of the Bank of England, the Janet Yellen equivalent of the Bank of England, Steve, this is an unfair question. Any idea who the governor is of the Bank of England?
No, but I read comments from him the other day because it sounds like they may even drop the rates once again.
They might do that again. I just enjoyed that he's a Canadian and he's the governor of the Bank of England. So anyway, that's your quiz info for the week. The Bank of England, in their attempts to spur the British economy going forward after the Brexit vote, they cut their interest rate to just 0.25%. Again, the lowest that it's ever been in their 322-year history. So what does that mean for mortgage rates back here in America? Well, the Freddie Mac, one of the two government-sponsored entities that securitizes American mortgages. They come out with their weekly survey. And let me just give you a quick rate roundup for where things were at the end of the week at low overhead Accunet on as Brian likes to say, on a $200,000 loan with 25% equity and all the right stuff, including escrowing for taxes, credit score above 740, and no second mortgage. Accunet Mortgage could deliver an interest rate on a 30-year fixed of 3.5%. That's with an APR of 3.52. It's with what I call the regular closing costs of $1,165. The things that have to get done no matter who is buying or refinancing a mortgage. You got to get an appraisal, got to figure out what it's worth, got to get title insurance to make sure no one else has a lien on the property, credit report, and the closing agent, the person who helps you sign your name at the closing table. So that's the 3.5%, 3.52 APR. If you prefer no closing costs, which is always my favorite, if someone else is willing to buy you dinner, that ain't such a bad gig. Accunet could deliver 3.625%. APR is the same. Again, no closing costs. And then if you wanted to get what the rest of the world is getting, according to the Freddie Mac survey, Accunet could deliver 3.375% on a 30-year fix. That's with 0.4 of a point, and that would be with closing costs of just $1,900. So when we come back, we're going to loop Brian into the conversation and get into our devil in the details stories, especially when it comes to appraisals and especially when it comes to income, when we come back from this first break.
You're listening to the Accunet Mortgage and Realty Show here on 620 WTMJ. If you have a question for us, we'll take it at 414-799-1620 or throughout the Midwest on the Accunet Mortgage toll-free talk line. That number is 1-800-877-1620.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And again, if you have a question for us, you can reach us at 414-799-1620 or throughout the Midwest on the Accunet Mortgage toll-free talk line. That number is 1-800-877-1620. David Wickert with us, and we're now joined by Brian Wickert as well, as we kind of focus in on the devil in the details when it comes to pulling together a mortgage financing package.
Absolutely right. Welcome to everybody, and thanks for listening to the show today. Yeah, I had a couple examples this week. David, you want to get started? Are we going to talk about appraisals first or income? What's your pleasure?
Yeah, let's talk about appraisals first, because I think that's the murkiest of all topics when it comes to details.
Yeah, you know, we'd like to think it's a science, but it's really a blend of science and art. The poor appraisers out there, and I feel sorry for every one of them, guys, if you're listening today, you know, their job is to give an opinion on what the house is worth based on recent closed sales called comparables. And they're supposed to find the most recent sales in the last year, that's one of the parameters, as physically close to the subject property as possible and as similar as possible in all the features. So the case that I was involved in this week was a 2-bedroom home purchase in South Milwaukee. And so the appraisal came in a couple weeks ago. And by Jove, for this 2-bedroom house, every single one of the comparable sales was a 3-bedroom home. And so the Fannie Mae servicer, where we were trying to place the loan, so Accunet doesn't sell loans directly to Fannie Mae. We go through some of the bigger banks and servicing companies and let them kind of do that middle part of the situation. Therefore, they underwrite the loans for us as well. They took a look at that appraisal and said, wait a minute, this is a 2-bedroom house and all the comparable sales are 3-bedroom. We would expect to see an adjustment. Because wouldn't you think, Steve, you know, that a 3-bedroom home would be worth more than a 2-bedroom?
Yeah, you would think.
You know, and so the appraiser made no line item adjustment for the fact that our subject had 2
these 3 bedrooms are exactly like the 2-bedroom and no adjustment.
Right, except for the fact that it's got one more bedroom.
Yeah, okay.
You know? And so the appraiser, they then came back through the appraisal management company and said, please have the appraiser, you know, address this seeming oversight. Well, the guy came back and said, nope, I'm not making any adjustment. Of course, he brought in the value for the subject property right at the purchase price. All right, so what happened? Back and forth. The clock is running. I'm thinking this loan's not going to get approved because what was about to happen was that the Fannie Mae underwriter was going to deny the loan because the appraisal report was unacceptable, right? Not that it didn't have a good enough value, but that it just was not acceptable because there should have been this adjustment. So we're getting ready to deny that loan. And because we're Accunet, we always have more than one kick at the can, right? Because we have more than one outlet for a 30-year fixed rate loan destined for Fannie Mae. So we get ready to start a new application. That's how we can handle the situation is we bury the old loan and the appraisal that went with it. And then we start a new application. And lo and behold, when we run the loan information back through Fannie Mae's underwriting system on August 3rd, all of a sudden we get an approval that says we don't even need an appraisal.
Wow.
Oh, man. It's like, oh my God. Because when we started this loan in late June, the software was version 9.1 for Fannie Mae's automated underwriting system. And in that version of software, it said, get an appraisal. Then on August 3rd, we run it anew, right? Because we're going to start over version 9.2 and it says, don't even get an appraisal.
Come on.
Come on.
Okay.
How can that be? Well, we felt so lucky because I was sure that we were going to get the same result with the second Fannie Mae servicer, right, on the discrepancy with the 3-bedroom versus 2-bedroom. Meanwhile, we are appealing, pretty please, can't you guys please just reconsider this and cut these people a break and approve the appraisal? Because everything else about this loan is rock solid. And at the last minute, our friends at Wells Fargo came through and approved the original loan with the weird appraisal. Don't ask me why, don't ask me how, but it goes to the point where even when the appraisal comes in at the value, we're not out of the woods yet because that appraisal report still has to pass muster and meet all the criteria of Fannie Mae and Freddie Mac. The devil, folks, is in the details.
Yeah, when we come back from this break, I want to dive into, I had a similar story on a low value when it came to a purchase, kind of in that same vein after we come back from this next break.
You're listening to the Accunet Mortgage and Realty Show on 620 WTMJ. Don't forget the Crew wraps up a 3-game series in Arizona later today. Brewers game day coverage starts at 2:35 this afternoon and can be heard on 94.5 KTI Country, sponsored by Catholic Financial Life.
Don't break the bank to get into a house. Back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, she's interviewed some of the biggest names in the world, and now she's getting into the podcast business. Katie Couric looks at the state of presidential politics and the media's role in it all during her conversation with Wisconsin's Afternoon News. Hear that tomorrow afternoon at 3:21 right here on WTMJ. David Wickert is with us on the Accunet Mortgage and Realty Show this morning.
So just going to slip in a story here in the same vein of appraisals before the bottom of the hour, and it has to do, again, with a purchase transaction. So have a buyer who agreed to buy a house for $250,000 and got going on everything, ordered the appraisal, and that report came back this week at a value of $240,000. So here's kind of if we pull back the curtain a little bit, on a purchase transaction, the appraiser gets a copy of the contract, and they know what you are agreeing to buy the house for, which, you'd think is the truest measurement of value. What are two non-pressured parties willing to buy or sell a house for? And though no appraiser would ever admit this out loud, they kind of know what they're aiming for in value because, again, they have a copy of the contract. Okay, so in this example, the value came back $10,000 below the agreed-upon price. And this is where, when you reserve the right in your contract via the appraisal contingency, it's all about protecting yourself as a buyer. And so if you write in an appraisal contingency into your contract and the appraised value of the home comes in $1 below your agreed upon price, you as the buyer have the right to come back to the seller. And so maybe just to weed into the weeds a little bit further, when the value comes in low for a purchase, we as mortgage guys can only lend on the lesser of the purchase price or the appraised value. So in our example, the purchase price is $250, but the appraised value is $240. So the answer to that riddle is we as mortgage guys, we're lending on the $240 value. And so if you're making a 5% down payment, I can only use, again, the $240,000 appraised value because it's the lower of the two. So you have three options at this point. And I think we do every Friday, our loan consultants pick up the phone and give everybody an update. This appraisal came in, I want to say Wednesday, and then on our weekly touch base on Fridays, was able to connect with the buyer's agent again and kind of just talk through the game plan. Because you got three options when the value comes in low. One, you can scuttle the deal. You know, if you're really not willing to pay or change the value because you have that in your contract, you can say, never mind. Okay, so that's one option. The other end of that spectrum is you can bring the difference in cash. And actually I did this when I bought my house. The appraised value came in a little light, and we really liked the house, and so we said, you know what, we'll bring the difference in cash. So in this example, you said you'd buy it for $250,000. We can only lend on $240,000, so we got to, combine. Maybe you're making a 10% down payment. That's $24,000 plus the $10,000 above what the appraised value is. That is a totally legitimate way to kind of keep things moving forward with a low appraisal, or you can split the difference and negotiate down to a different price. And so in our example, what's probably going to happen is they're going to lower the sales price to $242,000, and it's splitting the difference. The seller recognizes that the home just isn't worth what they might think, but the buyer is also willing to recognize that, hey, I was willing to pay a certain price, and I'll bring a little bit in cash as well. So that's kind of what can happen on a low appraisal on a purchase. So when we come back from the news here, want to continue our theme of the devil in the details, talking about income, especially when it comes to self-employed and commission-based folks, when we come back from the news break.
You're listening to the Accunet Mortgage and Realty Show on 620 WTMJ. It's now 10:30 on this Sunday morning as we welcome in from the WTMJ 24-hour newsroom, Sarah Lind.
Thanks, Steve. Brett Favre is now a member of the Pro Football Hall of Fame. The first three-time MVP and an NFL champion in 1996, Favre played 20 pro seasons with 4 teams. He defined toughness in appearing in a record 299 consecutive games, including 16 seasons with the Packers, a franchise he helped revitalize. The entire Russia team has been banned from competing in the Paralympic Games in September as punishment for the country's systematic doping program. The International Paralympic Committee's blanket ban on Russia is in sharp contrast to the earlier decision by the IOC to allow individual sports to decide whether Russians can compete in the Olympics. A wedding celebration is cut short in Madison due to carbon monoxide in the air. Firefighters and paramedics were dispatched to an indoor soccer club last night after someone fainted during the celebration. A generator powering a band was running indoors, and firefighters determined carbon monoxide was indeed present. 26 people were taken to the hospital. Everyone is expected to recover. WTMJ, PellaWI.com, time saver traffic. 94 inbound, Highway 16 to the zoo is 10 minutes. From the zoo to the Marquette is 6 minutes. 4145 southbound, Highway Q to the zoo will take you 14 minutes. 43 inbound, Brown Deer Road to the Marquette is a 10-minute trip. And 94 inbound from Layton Avenue to the Marquette will take you 6 minutes.
expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
If you have a question for us, you can phone it in at 414-799-1620 or toll-free throughout the Midwest on the Accunet Mortgage toll-free talk line. That number's 1-800-877-1620. David Wickert with us, Brian Wickert with us, and we're up to types of income, whether you're commission-based or you have a situation that's maybe a little bit more difficult to pin down.
Yeah. So I think in the broader theme of what we're trying to emphasize is stability of income and the likelihood of that income to continue going forward. Because ultimately, the thing that concerns underwriting, and ultimately underwriting is just following the rule book for creating a stack of papers called a mortgage that is laid out by Fannie Mae and Freddie Mac. What ultimately concerns them is a borrower's ability to repay the mortgage. And so when it comes to, the most obvious example is if you are a salaried employee, that is the, most cleanest way to document income, because as part of our operations process, we pick up the phone and say, hey, is Jim likely to, continue to be employed by you, Mr. Employer, at a salary of this? And if they say yes, that is the simplest, cleanest way to document income. But for folks who are commission-based or even bonus-based, those sources of income are, in their nature, variable, because you might have a great, commission month last month, and then, you go on, vacation to Seattle and you take a week off, and maybe your commission check, this next month is different, because you were hopping on a vacation for a week or so. So what we're trying to document is we're trying to even out your commission or bonus income over some period of time that makes underwriting comfortable. And so the best example of that is for commission income or bonus income, or even, quite frankly, overtime income. What we're looking for is a 2-year history of what that's looked like in most recent history. And so we've got a blog post out on Accunet.com that just talks through what kind of documentation we might have to ask for anyone whose income is something more than just base pay. And I think one of the themes that we've experienced or felt kind of pick up steam here are borrowers who have worked with us before, who have noted that, documentation is a little bit more dense in 2016 than it was in, 2013 or 2010. And that's definitely true. Part of good mortgage lending here in 2016 and going forward is good documentation. And so for folks who are commission-based or bonus-based, we're looking for a 2-year history reflected in your tax returns. We complete something called a written verification of employment with your employer to say, hey, HR department at Scripps Media, can you tell me, the breakdown of income for the past 2 years of our borrower? And so there are some exceptions to that. For example, FHA does have a little bit more wiggle room when it comes to a 2-year history of commission income. But I guess, the overall theme for anyone who's, got bonus or commission-based income is it might require a bit more documentation, but it's just because we're trying to prove that track record for getting that not volatile but changing income perhaps on a month-to-month basis. So that's the commission-based story. When we come back from this next break, I want to dive into someone who is self-employed looking to buy a home here this week and continue our theme of devil in the details when we come back from this break.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, a Packers legend is immortalized in Canton. You can relive Brett Favre's legacy and his career in Green Bay before the Packers take on the Colts in the Hall of Fame game this evening. Catch Brett Favre, Titletown to Canton, starting at 3 this afternoon, right here on WTMJ, sponsored by Sartori Cheese, West Bend, The Silver Lining, and HSHS St. Vincent's and St. Mary Hospitals. Brian Wickert is with us. David Wickert is with us. It's the Accunet Mortgage and Realty Show on WTMJ.
Dad, I wanted to loop it out to you. You had a comment on the commission-based or a bonus-based part of somebody's income.
Yep, and this kind of goes to a slightly different topic, and the conversation I've had to have many times, it seems like in the past month. And this is for somebody that makes a lot of money, W-2 income, kind of salary. But then, you know, as you get into higher income buyers and homeowners, a lot of times they will have ownership interest in partnerships. And so then they get a piece of paper similar to a W-2 called a K-1, which reports to you and the IRS how much income did you make off that partnership. And so what is annoying to these higher-end borrowers is that they have to give us the K-1s, every single one of them. And they're like, well, why does that matter? You know, I'm only making $232 of income. Why do you need that? And so the conversation that I have and the way that I put it is this. In many, many cases, it's not about whether the borrower is creditworthy. It is about manufacturing this stack of electrons to the specifications of the manual published by Fannie Mae and Freddie Mac. Because what we got to realize in the end is that your individual loan is being bundled with others and being made part of a tradable security, a mortgage-backed security. That security has a prospectus issued by Fannie and Freddie that tells the investor, we always like to say the State Teachers Pension Fund of Oslo, Norway, what were the manufacturing specifications of all the loans that are in this bundle of loans. And one of the specifications says if there are any K-1 income shown on the person's tax returns, in the file you will find a K-1 for each and every one of those items. Doesn't matter if it's insignificant, it's supposed to be part of the package. So it's annoying, and then get this, I had this borrower who owned 30% of a partnership. The rule book, the manufacturing specifications say if a person owns more than 25%, actually it's 25% or more of a partnership or an S-corp, then we have to get 2 years of tax returns for that business entity. So it's not that this income for this particular individual who makes $1 million a year on his W-2, and this K-1 has, let's say, $5,000 of income on it. It's not that we need the income to qualify. It's that it's part of the manufacturing spec. So that's the angle that I wanted to cover on that same topic.
So, and maybe in that vein, we got a quick story here on someone self-employed who this centers around maybe the difference between what's on paper and what reality is. This person was looking to purchase a home, and they're a business owner, but they actually never made distributions from their business checking account. They simply paid their personal, gas and groceries out of the business checking account, and then at the end of the year, lined everything up to make sure they were paying taxes on the right amount of money. But the mechanics being that their K-1 distribution, Dad, to your point on the paperwork, hey, it showed that they, made $20,000 from the business, but they actually never moved the money from the business account to their personal account.
Right. So I'm going to say that this is more of an example, David, of where Fannie Mae and Freddie Mac have actually gotten smarter And
Yeah.
so I'm familiar with this case. I got drawn into this case, as you know. The people were, reporting and paying tax on $60,000, but they didn't show on their tax return that they took any money out of the company. And so this would be analogous to, then we should be finding, and what Fannie Mae and Freddie Mac want us to then investigate further in situations like this is, great. If you had taxable income of $60,000, but you didn't take it out of the company, that money should still be in the company, right? Like in the company savings account. So go ahead and prove to us that the company still has all that money and that it therefore could distribute the money to you. Because let's be honest, if you really think about this particular case, you need the money to make your mortgage payment, right? You can't make it, you actually need the cash to come out of the business in order to make your mortgage payment. And so in this particular case, the money was no longer in the business. The business only had, let's say, $5,000 cash. Well,
Correct.
We needed it to have like $60,000. And so we were woefully short. In this particular case, this is a devil in the detail aspect where it really does go to the person's ability to make the mortgage payment.
When we come back from this last break, I want to tell the story about a friend of mine I'm visiting here in New York City who's actually moving back to Milwaukee, and the conversation we had about why buy a house. I think it goes to the heart of what we do at Accunet, and looking forward to telling that when we come back from this last break.
And if you have a question, you can reach us at 414-799-1620 or throughout the Midwest on the Accunet Mortgage toll-free talk line at numbers 1-800-877-1620.
Find a place to call home without the headache. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Yeah, it's kind of the coast-to-coast Accunet Mortgage and Realty Show this morning. We got David Wickert joining us from New York and Brian Wickert, who is out in Seattle. Now, David, you're out in New York visiting a friend who's thinking about moving back to Milwaukee, and the question has become, why buy a house?
Exactly. And I think so my friend just accepted actually yesterday a new job back in Brewtown as a creative director at a marketing agency. And so, she, along with her husband, started looking at condos and houses. And, I instigated a little bit. I was poking the bear on, why does she want to buy a house? And she gave all legitimate answers. She wants to own something after paying rent in New York City for a decade. She wants to feel like she owns something, wants to make a space her own. But, in my personal opinion, things like, getting a tax write-off on your property taxes or your mortgage interest or saying that a house is a good investment cannot be the primary reasons for buying a house. Because a house is just too much WORK #work. And so I guess bear with me a second as I, dive into a new theme at Accunet. So a quick tip of the hat to Mr. Michael Rampolla, a guy behind the guy. I was at Leadership Development Week hosted by Corey Joe Biddle's team at Fuel Milwaukee this spring. And Michael presented a workshop that kind of brought this theme together in my head. And so here's what I think we do at Accunet Mortgage. We help families host Thanksgiving. And I think in those 5 words, we pull together all the themes of why Accunet exists and why we love what we do. Because I think ultimately we are teachers. I say on the phone darn near every time I begin a pre-approval with someone that nobody goes to mortgage class in high school or college. I'm weird because I grew up at the dinner table talking about debt-to-income ratios as a kid. But it's okay if you don't know. And part of being a good mortgage practitioner is being a good teacher. So, and it's taking the time to explain all the minute details of buying a house. And so, to loop it back to my friends here in New York who are coming back to Milwaukee, the reasons why, they are thinking about buying a place is, they want to create your own place. They want to create their own space. And I think to our theme, it's having the financial and emotional ability to host your family, to make memories together, to create traditions with friends and with family. And I chose Thanksgiving because it's my favorite holiday, a lot of memories in my family. It is the most American holiday there is, and I guess home ownership is a very American idea. So if you ask me, what do we do at Accunet Mortgage? We help families host Thanksgiving. So I think to the theme that we've seen here headed toward the end of the show, it continues to be a hot market. I feel as though there was an initial wave of folks who wanted to buy a home here this summer, and so we were having a lot of conversations about pre-approvals at the start of spring and early summer. I would encourage anyone who is still thinking about buying a house here that there are still great houses that are coming up for sale, and that if you are going to compete with the many, many other buyers out there, you need to be the most attractive version of yourself when you go to write that offer. And so we've spent a lot of time at Accunet and resources to develop the rock-solid pre-approval because we think it makes you the next best thing to a cash offer. Because what you're showing a seller is, I have done my homework, and I have gotten to work on all the documentation that Accunet Mortgage needs from me. They are ready to give me a mortgage. I literally just need a house to buy. And so I think to our theme for this show on the devil being in the details, what a rock-solid pre-approval allows us to do is iron out any of those wrinkles ahead of time, because it's not, as Dad likes to say, it's not about credit scores. It's about pointing to the funds where you're going to be bringing the down payment and the income that you're going to use to pay the mortgage back.
Well, and you also have this peace of mind, and there's less stress.
Absolutely, it reduces the stress in a what can sometimes be a roller coaster of emotions buying.
Sure. And it gives you confidence.
That's all the time that we've got this week. So if you want to get started on a rock-solid pre-approval or pay less to live in your same house by refinancing, click on the blue button at Accunet.com, and we'll see you this time next week, Steve.
Sounds good. You've been listening to the Accunet Mortgage and Realty Show on 620 WTMJ. Sarah Lynn joins us from the WTMJ 24-hour newsroom next.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Scripps Media Incorporated.